All right, what's going on, everybody? This is going to be my weekly recap video for the week ending on the Friday of April the 12th. It's actually Saturday today, so it's the 13th, but this was the week of trading that this is for. Looking at Sunday, I had my first entry of the week that was pretty much this whole week in a nutshell has been getting caught in this new range that it's been in since the 500 points that it sold off on Thursday last week from the what was it? It was some type of news. It wasn't. No, this was the CPI. I think Jerome Powell, might have been speaking about monetary policy or something like that. But it was huge market sell off at the end of last week. This was after I had finished taking all of my setups. And so going into this week, should have been ready for more of a period of ranging like we saw. But I, was still looking to find entries, and there were a couple of positions like this first trade. I actually went into profit over $300 initially, and then it, went back, stopped me out, and I re-entered because it looked like it was still pretty bearish, and it was, but it was the wrong moment, and ended up getting stopped out for a loss on late Sunday, and then looking at Tuesday, similar situation. Had two short entries that reached approximately like 1-to-1 profit for each of them. But I accepted my risk. I wanted to leave that position open in case the trend had continued in my favor. And if I had waited until the morning on this particular day, I would have had a big piece of price action that I could have shorted around between 9 and 10 a.m. But this is when I was taking my entries, and kind of a similar situation on Wednesday. This was the day they had CPI, so normally when you have big news like this, um, whether you're long or short, the liquidity is going to get taken. Like, for example, if there was no way I was going to be able to get in short prior to the news, because as soon as the news hit, markets immediately pushed up, took all this liquidity up here, and then went down. So if I had gone short any time prior to this, I mean, this would have had to been a massive stop loss. This would have been like a 60-point stop that I would have had, which I'm not using a 60-point stop. So if I had wanted to trade the CPI release, I would have waited for that news to come out first. And then in the moment, I would try and uh, to determine the market's direction based off. Usually it'll push up one way and then it'll turn around and push further the other way. So it'll make a push for liquidity. Sometimes that pushes to the downside before eventually making much higher highs. But in this case, obviously, it was a push for buy side liquidity before selling off almost below these lows here. It almost took these lows, but not quite. So I don't really know what I expect going into next week. Going to be looking for some of these levels on the on this 4 hour chart now, and now this last leg that it sold off on Friday, and yeah, so we might see a liquidity void or some sort of gap up. If we do get something like that, I'm probably gonna be looking for a Sunday entry or a early morning Monday entry pre-market. I'm still gonna be looking for pre-market entries. I do think I ought to slow down with how eager I am to take a re-entry on the same setup. I could have saved a fair bit of my losses this week. Every one of these trades was a loss. All three of my setups failed. So I would be able to prevent some of those losses if I'm quicker to recognize ranging markets, and as I'm able to better anticipate that, it'll be a lot easier for me to cut back on my risk as I trade or as I don't trade. But that's going to do it. I am looking forward to taking my entries this week. Uh, Still going to be still in profit, but just barely. So I'm going to be working on trying to recoup some of these losses. But only if there's a setup that looks like it'll provide that. Not if not just for the sake of trying to create a trade in my head. So it's one thing that has still been a challenge for me is when you have like a good week and you're able to get on the right side of a trend, continuously for that week. But then once the trend changes and the same setups that you were taking now, you might have to be a little bit more patient with them. You kind of have to trade it differently. It's a little bit difficult for me to be quick to adjust to those changing trends. Like for this week when the market changed and it started to range rather than last week where it was kind of progressively selling off. Um, but nonetheless, going into this week, there's still obviously these lows and just barely, but I mean, technically, if we're speaking about the charts, I mean, these are higher lows that we're seeing here. These is a series of higher lows. With that being said, there obviously is a good amount of resistance at the above this moving average is the 200-day moving average. So, you know, we had a push above here toward the end of March and slowly started to sell off and consolidate before breaking down beneath it. And then this moving average has now become a level of resistance with any break above usually followed by a steep sell off. And now we're starting to see that moving average turn with this downtrend. So it's going to take, a fair bit before it really starts to break down. If it takes these lows, that's obviously a very bearish signal for this high time frame perspective. Um, it's not quite doing the same sort of behavior that it was earlier so far this year, where it would trend down and serve as a means of support. Now we're sort of consolidating in the middle here, and sometimes that is a precursor to another move up for higher highs. Sometimes it's what happens right before price breaks down to take lower lows. So we'll be paying attention on the Sunday Open. That's probably going to give us a pretty good idea of what direction to expect for Monday at least. But this is looking at the weekly chart. This is the third red week in a row for Nasdaq. So 3 red weeks in a row. Last time that happened was this right here. So July and end of July, early August of 2023. So it's been about 8 9 months since the last time this happened, and when these 3 red weeks did come, it's followed by a little retracement, but eventually by October that year, it had gone from you know between 14,700 and 15,700 all the way down to barely holding 14,000. So there, back then there was, you know, this was an area that got filled, but it went down pretty far to find the liquidity in down here sufficient enough to push the market back up to make higher highs. So if this does take these lows, I'm expecting it to come down to somewhere in this region, in the 17,000, the low 17,000s roughly. And it could go lower than that, right? We have, people are, speculating a lot about things like banking crises and inflation data being where it is, the fact that the Federal Reserve has expressed that they wish to see more progress on the inflation side of things before, more progress toward their 2% goal before they plan on cutting interest rates. It's anyone's guess really how much that's going to affect markets in the near future. So we'll see what quarter two will look like. We'll see what the inflation rate looks like for the month of May. Right, that could give us some sort of relief if Jerome Powell gets on and starts saying some refreshing things. But until next week, I will post another weekly recap. But yeah, this week just trying to take notes of what I did do correctly, which at least I, still stuck to my same three setups. I did take re-entries on two of them, so I guess if I'm counting every individual trade that I took, I did take more than three trades. But I do allow in my plan for me to take re-entries, at least one re-entry on the same setup if the first entry fails and it isn't a maximum loss, then I'll allow myself to re-enter with a reduced amount of risk. But yeah, so just going to be trying to work on being a little bit more patient, especially after big weeks, when the markets tend to go into a sort of a ranging period, and just trying to pay closer attention to when markets look like they're ranging. If I'm not getting a substantial like deviation from the trend or from the range that it's in, I'm probably going to try and find some type of rule or rules that I can implement, um, that will serve as a sort of a filter, for certain price action when there just isn't enough range, for me for it to be worth trading. It might be something like a Heikin-Ashi candle, and so the Heikin-Ashi candles track the average price. So maybe like make a 15 or a 30 minute or 1 hour average price, and if I'm not seeing a change or a strong movement toward an area of liquidity, then I might maybe that'll be my rule to try and prevent me from uh, trading price action that just isn't doesn't have an opportunity for me. But I'll have to figure that out this week. And until next time, I wish you guys a good luck in your trading.